Welcome back, session the third. Today date is April 30th, 2026. We are discussing the taxable income. We learned in the so far ninth part. So what we are covering the definition, what we understand in the first session. We said the definition of corporate tax is payable on taxable income. We understand the taxable income by a taxable person for a tax period. So this is what we understand, and we still continue the person, taxable income, and tax period. So here we have next, our learning is the election. Okay, so now the election that we seen today are just now the election. But let's understand the election on what are these election are available and when this election we have to opt for that. Some election in the first tax return we have to opt. What are the first tax election? The first election, what are the anybody want to highlight? This is the first tax city return, realization basis and transitional rule. These two election in the first city return we have to opt for that. And what is the realization basis? That is also very important. We will dive into that each election we're going to understand. So, but here today we are just looking which election in during the first return is important. You can log in into your portal or the FTA login. I'm gonna show you these elections from there quickly, although we covered in the just previously, but let's try one more time and cover this. Natural person relief, we're gonna discuss after this. Natural person relief. Let me share my screen one more time. Let me log in first. You can also log in. Let's learn quickly what are the election, how to opt for that. I can show you from this return presentation also, but let's do it together, parallel. Okay, so stop sharing, then sharing again, application. So now let me see. Yes, everybody can see the screen now. We're gonna learn the election from directly from the portal, how it gonna look. See, now we are starting the return here. A couple of points we say yes, start. So if we see in the taxpayer detail, after that is the election. This is the first activity that is FTA is requiring. So if we go through, let me see if I can have one page manage extension. Manage extension. Let me see. So we can say this company details, these are all standard. If we saying is yes, then he will move us to the below. So this is the partnership taxable person information he's requiring. Earlier we learned this part, so now we are saying no. Is we are government, we are saying no. Here, this is the revenue. This is the just now we are discussing. If we are putting here, let's see the practical example. 3.1 million, 3.1 million, and we can opt for the cash. Is giving the option. Eventually, he should not give because if exceeding, so he will give us error. So accrual basis, you can try from your side. So now we are saying this multinational, we are saying no. Double taxation, we are saying no. Then free zone, we are saying no. Here, one of the question was, yes, you can say yes. Even you are free zone, we can say yes. But here, what will happen? Then he will ask the next question. Is taxable person making an election to corporate tax under the standard rate? Yes, still you can go for the 9%. Okay. This is another important part. Even you are free zone, but you want to opt for the 9%, you can opt for that. But this is the gentle approach. You know that you are not meeting the criteria of the qualifying free zone activities at the then you can go straight forward with that. If it's not the gentle approach, you're still saying no, I don't want to opt. But they will say, okay, does the taxable person meet the requirement to be considered as a qualifying free zone? Okay, now here the impact assessment. That is the important impact assessment. Impact assessment is not the audited financial statement. You cannot take the audited financial statement and say, okay, now let's do it the qualifying free zone return, zero rated. No, that standalone you have to run for the activity for the qualifying free zone. There is certain parameter that you have to check: qualifying activity, non-qualifying activity, threshold. So here still, if you say no, by default you are coming towards 9%. Either gently you can opt from here. If you're saying you are not meeting the condition of the qualifying free zone, then again you are coming towards 9%. So as the company is not the free zone, so let's move to the next. This is the election. First election that we are discussing, the realization basis. Would the taxable person elect to use the realization basis? Here you can go and see some comment also. This election taxable person to recognize certain unrealized gain and losses for corporate tax on the realization basis. Now, what is the realization? That also we have to understand. Realization would occur when, for example, the asset is sold, disposed of, or terminated. Now, he already given the example. Let's say we have the car value. Let's say we have the car value is 30,000. Okay. Government applied some taxes, some increase the custom duties. So today market value for that same car is 40,000. So now you took the valuation and you said, okay, I have the car value from 30 to 40. You can increase the asset value. What you will do with this 10,000? You will record in the profit and loss. You will say, okay, this is the increase in value. This is the your income, other income due to increase in value. So now this 10,000 will be subject to tax. This actually is not funds didn't came to accounting or bank. Due to change in the market value, we said, okay, our asset value is 40,000 from 30,000. So this 10,000 is not realized. But if you sold the same car, the value was in your books 30,000, you sold for 40,000. So now is realized, so that it will be taxed at the actual. So this is the definition. If you want to use the realization basis, then again he will say your bank or the insurance will say no. Again, it will be show another two option under that: all the asset and liability that is subject to fair value or impairment. What does that mean? The car, the financial assets, either the fixed asset, the non, and we have the receivables, payables, that also. If we talk all the asset and liabilities, then everything will be on that. Even the bad debt provision also will be fall under the same calculation. So normally we are saying if you go for this, there will be more complication on tax computation. So then we are saying all asset and liabilities held at capital accounts. Now these are we're talking about the fixed asset, the capital. So now the revenue item will not be counted. Their tax computation will be comparatively is easy under this, because the revenue item is here. Then each item you have to check individually. So we can opt for this. Okay, whatever the election we are opting, it will be increase our accounting schedule, accounting adjustment. Further field will be added over there. So this is the mandatory during the first tax return. We have to opt for that. Next return, he will not give us the option. And this is the irrevocable. Then this is the second election, transitional relief. Transitional relief applying normally on the immovable property on prior to the first tax period. Okay, if you purchase the property in 2025, you cannot apply this. If you have the property before the tax implication, that is the 1st June 2020, before the first tax period, that is if you have tax period Jan to December, so then 1st January 2024. Accordingly, this election we opt yes or no, the further field will be applied. So let's say we are saying no, okay, because the qualifying here so we said yes. That's why he's saying list here the properties. Just quickly we can show you this here. Here we have to add the property name, address, value, property valuation, everything that we will provide. That we will cover once we come on this topic. Today we are just looking for the election. So realization basis we understand, transitional basis we understand. Okay, now he's saying the adjusted taxable income for qualifying on before the first tax period. So we are saying no. So now let's see. Here also we are saying no. Now we don't have the option for to opt for the small business relief. Otherwise, he will give us the option yes or no for small business relief. As the sales revenue is more than 3 million, so this option is not there. Now we will continue with the full return. So let's see. We'll go back. I given you the example of 2.5 million, then another 1 million. So let's say if we put here exactly the 3 million. Now we continue the next. If you see now this option is available, option is available. Would the taxable person like to make the election for small business relief? Yes or no? If we're saying yes, so khalas, no further compliance on that. Here we can attach the financial statement. If we're saying no, it will be continued. Hope this point is clear now. This point is, I believe we understand very precisely, but I can show you one regarding the elections. Well, these elections we will understand with example moving forward on coming Sunday. So far we covered up to this. Let me see the national person. Yeah, this is the election eventually. The revenue threshold, I forgot. Okay, so now we are looking for the election. So let's quickly understand the election. I just log in to city. this is okay. I have to this return filing. Why this is this? Okay. So let me share the screen again with you guys. Application, city return. Okay, this is the actually the full return we are covering, but currently we are covering one by one where we are coming to the relevant part. So today we're seeing the accounting policies, multinational, this. This is this. Freeze the home, immovable property. Okay, so here the election we're talking about the realization basis. This realization basis, just now we understand what is the realization basis. So I'm just trying to explain the realization basis. We will elect to yes or no. If no, there no further activity. Election A. We are calling just as a reference. We are giving the name for discussion purpose. Election A. Elect to recognize gain and losses on realization basis, where we are saying the all asset and liabilities. What does mean? Capital nature plus revenue nature. So here you will understand what they mean capital, like the fixed asset, and here we are saying the AR, like AP, like inventory. All this will be falling under the in this category. So let's take the example. We said the we can gonna take the example of the realization basis. Realization. First, we have to understand why this realization is important. We taken the example of the car. We can say the plant. Same. We can, if it was the 30 million. Okay. Recently, due to the inflation or the custom duties or taxes, the plant market value is 40 million. What is in the book? 30 million. This is the market value. This is the book value. So there's an increase of 10 million. So if you follow the non-realization basis, this will be recorded in your financial statement 2025, and your profit taxable income. If let's say before this is 100 million, so by adding this 100 plus 10, it will be 110. So now you will pay tax on this amount by 9%. If you follow non-realization basis, if we opting this, then we have to pay tax on this 10 million also. So just calculate 10 million by 9%. What is the impact? Versus if we saying yes, we will opt for the realization basis, then we are saying which realization basis, on all asset or on capital asset. So normally we recommend go for the capital asset. So this 10 million will not be subject to tax. So in tax computation, we will minus this because it's already added. We will minus it again, will come on the 100. So this is not coming under the tax computation. So realization basis, we're gonna see that yes or no, taxable person like yes or no. Then we're gonna see what are the impact on that. If we opt for the realization basis all asset irrevocable, again, this is the irrevocable election for lifetime. But I'm going to show you some additional points. The realization base. Yeah, this is the transitional. This is another second election that we're saying this is mandatory during the first tax period. During the first tax period is also mandatory. We have to opt for that. But again, this is not applicable on all the businesses, but the first realization is applicable on all the businesses. But in a return, we must know what is the transitional relief. Transitional relief are qualifying immovable property, asset are the financial intangible asset and qualifying asset during the first tax period. So today we're gonna stop over here. If you have any question over here, so please let me know.